Every generation thinks it understands how the world works until it collides with the machinery quietly operating behind everything. We imagine nations running on democracy, markets driven by supply and demand, and debt as a temporary burden that responsible leaders eventually solve. But none of that is true. Because buried underneath the speeches, institutions, and patriotic myths is a system older than most countries, engineered by men whose names barely appear in textbooks, so that their influence shapes your paycheck, your mortgage, your savings, your taxes, even your idea of what money is. This system has one purpose: to keep every government, every corporation, and every citizen permanently in debt. The shocking part? No secret conspiracy meeting was ever required. The trap was built piece by piece by 4 men in 4 different centuries, each solving a specific problem, but always in a way that made debt more permanent, more profitable, and more inescapable. By the time the last piece clicked into place, the entire world had been locked inside a structure that can never unwind without collapsing everything we depend on. You don't feel the bars of the cage because you were born inside it. But once you understand how the cage was built, you'll never unsee it. Let's begin. For most of human history, debt was temporary. A king borrowed from merchants, fought a war, and paid them back. Core defaulted. The slate cleared. Debt didn't define nations. It wasn't the lifeblood of the global economy. It was a tool, not a foundation. That all changed in 1694 when a Scottish merchant named William Paterson approached the desperate King William III of England with an offer that would alter the future of civilization. England was losing a war. It was broke. And out of lenders willing to risk money on a monarchy that had already defaulted, Paterson proposed a loan so large it would save the kingdom, and a structure so radical it would transform the meaning of debt forever. England would borrow the money, but never repay it. The principal would remain outstanding permanently. Only interest would be paid year after year, generation after generation, guaranteed by Parliament. To manage this new arrangement, Paterson proposed the creation of an institution, the Bank of England. What looked like a national rescue is actually a shift in power so profound that its implications are still unfolding today. For the first time, the government tied its survival to a permanent creditor, one that could print paper notes backed not by gold, but by the government's own debt. Debt became money. Money became debt. And the system locked into a loop that would never reset. Other nations copied it. Sovereign debt became normal, expected, structural. But it was the next architect who transformed it from a clever invention into global machinery. Fast forward to the early 1800s. Europe was burning in the Napoleonic Wars. Nations needed money faster than ever. But even permanent debt had its limits. If a king defaulted, creditors could still lose everything. Nathan Rothschild changed that not by preventing default, but by making it impossible. His family already had banking houses in 5 European capitals, giving them something no one else had: a continent-wide intelligence and money-moving network faster than any postal service or army courier. Rothschild realized something no one else saw. If he could turn government debt into a tradable product, something bought and sold like wheat or iron, then a default wouldn't harm a single creditor. It would harm everyone who held those bonds across borders, industries, and financial systems. Debt would become so interconnected that governments would no longer default because the fallout would destroy entire economies, not just their creditors. So he industrialized sovereign debt, bought government bonds cheap, sold them to a growing market of investors, pension funds, and banks, and created a global web of ownership. Every bond sold tightened the trap. Every investor who bought one became another reason a government could never walk away from its obligations. Rothschilds didn't just lend money, he built the network that made walking away impossible. Nations fell in line. By the mid-1800s, debt wasn't just permanent, it was systemically essential. A country defaulting would be like removing a keystone from an arch. The whole structure collapses. But this was only the second layer of the trap. The third layer would make debt infinite. By 1900, the United States was rising fast, but still had a fragmented banking system. Panics were common. Banks collapsed frequently. Money supply was unpredictable. The government's ability to borrow was limited by how much actual capital existed. Then came the panic of 1907. Banks failed, markets crashed, and the economy faced catastrophe. One man, J.P. Morgan, stepped in personally to stop the collapse, organizing a private bailout in his library. The event revealed two terrifying truths. The U.S. needed a central financial authority, and whoever controlled that authority would essentially control the American economy. In 1910, senators, bankers, and Morgan's closest allies met secretly on Jekyll Island to design that authority. The public hated the idea of a central bank, so they disguised it as a Federal Reserve System, decentralized on paper, but in practice, controlled by the same banking interests that engineered it. Its most important power is the ability to create money by purchasing government debt. That single mechanism changed everything. With the Federal Reserve as an always willing buyer, the U.S. government could borrow without limit. There was no longer a natural cap on debt. As long as the Fed kept buying bonds, debt could grow forever. It did. Permanent debt became infinite debt. And modern economic policy became fundamentally dependent on issuing more of it. But the final architect would ensure the trap extended beyond rich nations and ensnared the entire developing world. By the late 1970s, developing nations had borrowed heavily, mostly in dollars, to modernize their economies. When interest rates rose, many couldn't make payments. The system faced a crisis no one had prepared for. Paul Volcker, chairman of the Federal Reserve, made a decision that would finalize the trap. He raised interest rates to levels never seen before, nearly 20%, to crush inflation and restore global trust in the dollar. But those rate hikes detonated the finances of dozens of countries. They couldn't pay. Default loomed. And major U.S. banks faced disaster if those loans went bad. Volcker didn't allow default. He institutionalized refinancing. Through the IMF, developing nations were given new loans, not to reduce their debt, but to ensure they could continue paying interest to Western banks. In exchange, they had to accept harsh economic reforms that stripped them of sovereignty, privatizing industries, cutting social programs, and opening their markets to foreign control. The message was clear. Debt would never be forgiven. It would be rolled over forever, and the interest would always flow upward. Volcker globalized the trap. No country was allowed to escape, not by default, not by negotiation, not by economic crisis. Put these four layers together. Patterson made debt permanent. Rothschild made it globally interconnected. Morgan made it infinite, and Volcker made it inescapable. The result is the world you live in today. A world with $315 trillion of global debt, 3 times the size of the world economy. A world where governments do not pay off debt. They extend it, refinance it, and depend on it. A world where new money is created only when more debt is issued, meaning paying off all debt would collapse the money supply itself. A world where default anywhere threatens collapse everywhere. A world where you, Dan T, vote for the people who run the system because the system runs itself. And the most important truth of all, debt today is not a problem.
Oh.
It is the operating system. Every dollar you hold exists because someone else went into debt to create it. Every government budget relies on borrowing. Every retirement fund depends on interest payments. Every bank balance sheet is built on sovereign bonds. The system cannot end voluntarily. It cannot unwind gradually. It cannot be dismantled safely. Because the moment the debt begins to shrink, the money supply shrinks with it, and the global economy implodes. This is why the world owes $315 trillion and why that number only moves in one direction. Not because leaders are incompetent, not because citizens overspend, but because the system was designed deliberately to function this way. A system you can work within, a system you can benefit from if you understand it, but a system you can never, ever escape. If you want to understand who operates this machine today and how it silently shapes your life, subscribe, because once you see the architecture, you'll realize the economy isn't broken. It's working exactly as designed.